We live in uncertain monetary times in the U.S. Things seem to be moving very quickly, with every day bringing on new challenges and obstacles. That the Federal Reserve is steering ever faster towards a central bank digital dollar known as a CBDC. While many praise the possibility of this new monetary system, several others are warning the American people that this would be a wolf in sheep's clothing to put the country on the path to authoritarianism. I'll look today at the CBDC in this report. The CBDC would use a digital dollar based on the blockchain similar to Bitcoin. However, any resemblance beyond that would totally end. The CBDC would co-opt Bitcoin's appeal while undermining every one of its foundational principles. If adopted, the U.S. government would use digitally represented dollars that still would have the issues of fiat currency that Bitcoin was created to solve, with a sinister new twist. Many financial experts are worried that by centralizing Americans' financial information and holdings in a digital database controlled by the U.S. government, CBDCs would develop an oppressive surveillance state and possible severe overreach of government power. If the U.S. government ever establishes a CBDC, they would be both money printer and our bank, throwing out any checks and balances over Americans' financial holdings. They would have complete discretion over how and whether people can use their own money. And if a CBDC is ever linked to a social credit score system like in China, the government would have the ability to penalize bad behavior by removing account funds and refusing to let funds to be spent on certain things. For instance, someone critical of government on social media may have their internet access restricted, or they can refuse people access to certain foods for their health. See how this could go? The government then would have total control and oversight over every person's holdings and transactions. Not surprisingly, CBDCs have been fully embraced by the Chinese government. You might think that an idea championed by an authoritarian state would cause CBDCs to lose their charm to the U.S. government. However, it only has served as the impetus for American exploration of the digital technology. China's digital yuan is an indispensable tool for the Chinese government to acquire vast amounts of public data and to strengthen their surveillance state. Since February 2022, they're able to turn off people's money like a light switch. While fiat currencies usually are devalued over time by inflation, CBDCs can be devalued in an instant at the government's whim. As the U.S. Fed and our Congress begin to debate the possible implementation of a new CBDC, a huge distinction has to be made between wholesale CBDC and retail CBDC. With a wholesale CBDC, banks can electronically transact with each other using a liability of the central bank, much like they already do now. But retail CBDCs would allow the public to make electronic payments of all kinds at the liability of the Federal Reserve, not of a commercial bank. Many want our Congress to make sure the Fed never issues a retail CBDC. This is because the Fed, not privately owned commercial banks, would be responsible for issuing deposits. The difference for consumers and merchants is that any Fed-adopted CBDC retail version would automatically come with zero credit or liquidity risk. Private firms can't compete on that level. They, unlike the Fed, have to recover their costs to stay in business. Most experts agree that there is very little chance the Fed launches a fully functional CBDC in the next several months. However, many say it is only a matter of time. The main problem with the CBDC is there is no limit to the level of control that the government could exert over the public if money is purely electronic and provided directly by the government. The CBDC would hand over to federal officials full control over the money going into and coming out of every person's account. We should be skeptical of this. Finally, some U.S. states are taking the initiative to try to get ahead of any Fed-released CBDC by passing through their legislatures bills to ban their state agencies and institutions from accepting any payments in central bank digital dollars. This currently has been done in North Carolina, Florida, and South Dakota. 4 other states have proposed bills to do the same thing. Whether the Fed still forces CBDC compliance or agrees to make sweeping changes, only time will tell. This is A.J. Graves.